Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, it's Thursday. It's been a quick week. And markets coming back a little bit. So let's come and look at things.
Derivatives trading involves substantial risk of loss and is not suitable for all investors.
We are
Past performance is not necessarily indicative of future results.
Enough, I had it. Oh my gosh, mate. Hold on. Let me blow. So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You can see that we came back. You don't fight this. No way. The markets are freaking out, and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Got screwed up, didn't it? Yeah, my scene transition thing got screwed up. Okay. Boom, 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 boom. Okay. So anyways, we gave up some of our gains yesterday, but I got out. So cool. We have ECB today. We've got some top tier data coming here in just a few seconds. So real quickly here, S&P 500 giving up its gains from yesterday. Oil took a pretty good jump there on, a lot of things moved off of that fall in the dollar. Gold and silver pretty okay. Silver kind of outperforming. Apparently there's some need for physical silver out there. Then we got copper. Copper moved pretty good too. Bitcoin didn't participate as much as some of the other ones. And then here you see the dollar taking a big decline, but climbing its way back here this morning. And yeah, we've got initial jobless claims in durable goods and GDP coming here in just a few seconds. So okay, durable goods slightly less than expected. Okay, initial jobless claims slightly less than expected at 217 versus 220. I'm still waiting on GDP. GDP 2.6 higher than the expected 2.4. I don't think that that's good, but the numbers I'm seeing here aren't necessarily good, but they're not terrible. When I say good, I mean that shouldn't necessarily push the treasuries up, but it's a little mixed. We haven't gotten core PCE prices yet, which is the important one for bonds, right? Okay, core PCE was in line with expectations. Oh, by the way, we need to turn on this strategy here. So this does kind of bring us back to levels from yesterday. Let's go through the numbers here again. Quarter over quarter advance 2.6 versus an expected 2.4. So GDP was better than expected. That would be generally be bad for bonds. Initial jobless claim slightly less than expected, 217 versus 220. So that's good for the economy and generally bad for bonds. Durable goods, spot 4 versus spot 6. And core durable goods, negative spot 5 versus an expected spot 2. So that might be the one that's pushing bonds up, right? And then core PCE prices advance 4 spot 5 versus 4 spot 5. I'm not sure about this one, guys. Not entirely sure. I guess another thing that's going on this morning, Facebook is down 20%, 22%. It's crazy that the futures are not like that the S&P 500 isn't like big time down. And Credit Suisse is having a quote unquote simplification plan. What's going on over there? They're restructuring. They are doing the long rumored restructuring. I don't know about this one, guys. This is kind of a little bit of an odd move, I think. It's very illiquid right at the moment. I feel like I don't know as much about durable goods report as some of the other reports. Core durable goods orders are comprised of durable goods, which are goods that do not wear out quickly or have a lifespan of more than 3 years and include a wide range of items, including computer equipment, industrial machinery, trains, planes, and automobiles. Okay. So we're saying that for things that you buy and you keep for a long time, that has decreased a lot, which is generally an indication of a weakening economy. Indicator of the current and near-term health of the economy. Core durable goods, new orders may signal psychological optimism or perceived uncertainty. I don't know. Oh, good point here. Alligator pointing out that U.S. continued jobless claims 1.438 million versus 1.39 million. Much, well, not much, but a decent clip higher than anticipated. It looks like a big move, but then when I look at the yields on the 10-year, didn't really move them that much. Hey, good morning, Tobias. Yeah, we do have. So let me go down here through the list, because at 9 o'clock we've got the Kansas City Fed Manufacturing and Composite Index. That's when we leave. And then we get the ECB press conference here in about 5 minutes or whatever. Oh, did we get the ECB rate? Yeah, the ECB rate was anticipated too. But that was before the stream started. I don't know. I'm not really sure why we had this pop. It kind of looks like it's going to completely retrace. So there you have it. And there was a big fire in Salt Lake last night, and apparently it is still going. What's on Zero Hedge here this morning? As Meta plunges to double digits, Wall Street gives up on Facebook. Did Michael Burry ever give up on Facebook? Yeah, good GDP, I thought. Well, yeah, so that's kind of like where I'm like, okay, so seeing quarter over quarter GDP advance being 2.6 versus an expected 2.4, better than expected. I don't think that 0.2% is a huge beat by any means, but it is good. So if it's good, you would expect bonds to move down, right? If it was good, you would expect bonds to move down. They didn't. So when trying to sort out why did we pop up, I'm not entirely sure. Alligators points out that we see continuing jobless claims continue to rise and higher than expected. So that could be a very good reason to see that kind of action for sure. By the way, we will watch the ECB governing council again. But yeah, I don't know. I find some of this action a little bit puzzling. You know, so yesterday, so I kind of mentioned this at the beginning, but I know that a lot of you guys aren't here when I just barely start the stream. But you know, I was swinging yesterday, and I could have gotten $90 out of it. I think in the end I ended up taking like 67, something like that. So really good for the account, but it's good progress. But I was really hoping it was going to be like 150, 200 tick move, or that, or even more than that, and there was something that I could hold for several weeks. But you know, I started reflecting on it a little bit more in the afternoon, and I talked myself out of it. And I think I made the right decision. You can kind of see here this morning. I would have given up a lot more because I was taking it off at like 415 or something like that. So it hasn't moved as much the last day or two. Hasn't moved as much the last day or two. So like I'm like, oh man, the Canadian Central Bank didn't meet the market expectation. They thought they would do 75 and they did 50. Like that's kind of a big deal, right? And sure enough, they popped like when it happened, but then they basically gave it all up. It's like, what the heck is going on here? Well, I think it's really key to note that we've got 4% down below us. So we fought for such a long time over 4%, and now it seems like 4% is kind of acting as resistance here for the bonds. That's kind of what it seems to me. It seems that even though the Federal Reserve is like, there's been a shift in narrative and messaging, and the Federal Reserve is planning on like holding rates here for a long time and all of that, that the market thinks that they've priced the bonds fairly well, and they don't see anything yet that makes them want to go back to 3.75, essentially, is what I think the market is telling me. So when I saw that, it scared me out of the trade, and I took the profits, and it was a good decision. I really stressed out about it. I'm like, I'm gonna wake up tomorrow, the bonds are gonna be up really big again. I'm gonna be like, why didn't I hold it? No. But the other thing that played into it too was I was like, well, yeah, but we have ECB tomorrow, and then next week we get the Federal Reserve, and then also next week I can't hold it past next week because it expires on Monday. You don't want to trade it on Monday because the liquidity is always crap when the micros shift, right? The liquidity has been really, really terrible. So I would prefer to avoid trading it on that day, you know? So in the end, I was kind of like, you know what? You kind of got lucky, because you didn't know that the Canadian Central Bank was gonna surprise the markets. You didn't even really think about, you had kind of forgotten that it was even happening. You know what I mean? So Akshay asks, why aren't the bonds flying? Why should they be? I don't know. Like that data, we just had some pretty top tier data for sure. I really like here again, Alligator in Discord pointing out that the US continued jobless claims are higher than anticipated, even though the initial jobless claims are pretty close to what we had expected, if not a little bit below what we expected. Yeah, I think things are kind of pointing to exactly what the market was expecting, making it hard to have anything really big happen. I maybe could have, when they touched me there at 26, I maybe could have added a contract, but no. Wait, where are you getting the 10.5? So I have US core PCE prices advance, expectation 4.5, actual 4.5. So where did you get the 10.5? Not the core, just the headline. You know, on my board here, oh, on my board they didn't have an estimate. On my board they didn't have an estimate. Let's come over here to, oh, now that's interesting. When I go on Forex Factory, they don't even list PCE. That is kind of interesting. But there's like 2 PCE numbers, right? Seem to recall. Let me see if I can find it. Yeah. So like tomorrow we get core PCE price index month over month. Let me verify that over here. Yes. US Core PCE Price Index. Okay. So that's kind of confusing, isn't it? There's US Core PCE prices, but that's not the price index. Oh yeah, ECB is live now. Let me switch to that.
Right. And by Vice President De Guindos. We are, as in the past meetings, in a
ECB's Lagarde says we've made substantial progress in withdrawing a
following us via Webex to turn on their cameras and their microphones should they want to ask questions. And now I would like to turn the floor to President Lagarde. President Lagarde, please.
So good afternoon. The Vice President and myself are delighted to welcome you to our press conference. The Governing Council decided today to raise the three key ECB interest rates by 75 basis points. With this third major policy rate increase in a row, we have made substantial progress in withdrawing monetary policy accommodation. We took today's decision and expect to raise interest rates further to ensure the timely return of inflation to our 2% medium-term inflation target following our meeting-by-meeting approach. Inflation remains far too high and will stay above our target for an extended period. In September, euro area inflation reached 9.9%. In recent months, soaring energy and food prices, supply bottlenecks, and the post-pandemic recovery in demand have led to a broadening of price pressures and an increase in inflation. Our monetary policy is aimed at reducing support for demand and guarding against the risk of a persistent upward shift in inflation expectations. The Governing Council also decided to change the terms and conditions of the third series of targeted long-term refinancing operations known as TLTRO III. During the acute period of the pandemic, this instrument played a key role in countering downside risks to price stability. Today, in view of the unexpected and extraordinary rise in inflation, it needs to be recalibrated to ensure that it is consistent with the broader monetary policy normalization process and to reinforce the transmission of our policy rate increases to bank lending conditions. We therefore decided to adjust the interest rates applicable to TLTRO III from November 23, 2022, and to offer banks additional voluntary early repayment dates. Finally, in order to align the remuneration of minimum reserves held by credit institutions with the Eurosystem more closely with market conditions, we decided to set the remuneration of minimum reserve at the ECB deposit facility rate.
So I'm going to try and be quiet here for this first part.
The decision that we took today are set out in a press release that is available on our website. The details of the changes to the TLTRO III terms and conditions are described in a separate press release to be published at 3:45 Continental European Time. Another technical press release detailing the change to the remuneration of minimum reserves will also be published at the same time. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Economic activity in the euro area is likely to have slowed significantly in the third quarter of the year, and we expect a further weakening in the remainder of this year and the beginning of next year. By reducing people's real income and pushing up costs for firms, high inflation continues to dampen spending and production. Severe disruptions in the supply of gas have worsened the situation further, and both consumer and business confidence have fallen rapidly, which is also weighing on the economy. Demand for services is slowing after a strong performance in previous quarters when those sectors most affected by the pandemic-related restrictions reopened, and survey-based indicators for new orders in the manufacturing sector are falling. Moreover, global economic activity is growing more slowly in a context of persistent geopolitical uncertainty, especially owing to Russia's unjustified war against Ukraine and tighter financing conditions. Worsening terms of trade, as the prices paid for imports rise faster than those received for exports, are weighing on incomes in the euro area. The labour market continued to perform well in the third quarter, and the unemployment rate remained at the historically low level of 6.6% in August. While short-term indicators suggest that jobs were still being created in the third quarter, the weakening of the economy could lead to a somewhat higher unemployment in the future. To limit the risk of fueling inflation, fiscal support measures to shield the economy from the impact of high energy prices should be temporary and targeted at the most vulnerable. Policymakers should provide incentives to lower energy consumption and bolster energy supply. At the same time, governments should pursue fiscal policies that show they are committed to gradually bringing down high public debt ratios. Structural policies should be designed to increase the euro area's growth potential and supply capacity and to boost its resilience, thereby contributing to a reduction in medium-term price pressures. The swift implementation of the investment and structural reform plans under the Next Generation EU programme will make an important contribution.
Not sure if this little trend up is because of anything she said or if it's just rotating.
Rose to 9.9% in September, reflecting further increases in all components. Energy price inflation at 40.7% remained the main driver of overall inflation, with an increasing contribution from gas and electricity prices. Food price inflation also rose further to 11.8%, as high input costs made food production more expensive. Supply bottlenecks are gradually easing, though their lagged impact is still contributing to inflation. The impact of pent-up demand, while weakening, is still driving up prices in the services sector. The depreciation of the euro has added to the build-up of inflationary pressures. Price pressures are evident in more and more sectors, in part owing to the impact of high energy costs feeding through to the whole economy. Measures of underlying inflation have thus remained at elevated levels. Among those measures, inflation excluding energy and food rose further to 4.8% in September. Strong labour markets are likely to support higher wages, as is some catch-up in wages to compensate for higher inflation. Incoming wage data and recent wage agreements indicate that the growth of wages may be picking up. Most measures of longer-term inflation expectations currently stand at around 2%, although further above-market revisions to some indicators warrant continued monitoring. The incoming data confirm that risks to the economic growth outlook are clearly on the downside, especially in the near term. A long-lasting war in Ukraine remains a significant risk. confidence could deteriorate further, and supply-side constraints could worsen again. Energy and food costs could also remain persistently higher than expected. A weakening world economy could be an additional drag on growth in the euro area. The risks to the inflation outlook are primarily on the upside. The major risk in the short term is a further rise in retail energy prices. Over the medium term, inflation may turn out to be higher than expected if there are increases in the prices of energy and food commodities and a stronger pass-through to consumer prices, a persistent worsening of the production capacity of the euro area economy, a persistent rise in inflation expectations above our target, or higher than anticipated wage rises. By contrast, a decline in energy costs and a further weakening of demand would lower price pressures. Bank funding costs are increasing in response to the rise in market interest rates. Borrowing has also become more expensive for firms and households. Bank lending to firms remains robust as they need to finance high production costs and build up inventories. At the same time, demand for loans to finance investment has continued to decline. Lending to households is moderating as credit standards have tightened and demand for loans has decreased in a context of rising interest rates and low consumer confidence. Our most recent bank lending survey reports that credit standards tightened for all loan categories in the third quarter of the year, as banks are becoming more concerned about the deteriorating outlook for the economy and the risks faced by their customer in the current environment. Banks expect to continue tightening their credit standards in the fourth quarter. So summing up, today we have raised the 3 key ECB interest rates by 75 basis points and expect to raise interest rates further to ensure the timely return of inflation to our medium-term target. With this third major policy rate increase in a row, we have made substantial progress in withdrawing monetary policy accommodation. The changes to the terms and conditions of our targeted longer-term refinancing operations will also contribute to the ongoing policy normalization process. Our future policy rate decisions will continue to be data-dependent and follow a meeting-by-meeting approach. We stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term inflation target. And we now stand ready to take your questions.
Thank you, President Lagarde. And the first question goes to Caroline Look of Bloomberg News. Caroline, please.
Hi, good afternoon, President Lagarde.
Good afternoon.
Could you tell us whether you are comfortable with the expectation that interest rate steps are going to slow after today's decision and peak somewhere around?
They came back up to the highs there, but...
And secondly, since we're now at the lower end of the neutral rate estimates, would it be fair to assume that the ECB could be ready to lay out a plan for reducing its balance sheet at its next meeting in December?
Hey, NASDAQ killer, where you been?
So that's a bag of questions that you put into one question. So what we have done with the decision taken today is making yet more progress in withdrawing the accommodative and support to demand that was made available. So we have made substantial progress in withdrawing that. Have we completed the job? Have we finished the normalization of our monetary policy, as we have called it? No. There is still ground to cover. What we have reiterated now is that we're going to decide the future path and pace of our rate increases on the basis of the data that we have, and we will do so meeting by meeting. So we are very much and deliberately turning our back to forward guidance, which is not helpful in the current circumstances, given the level of uncertainty that we have pretty much all around. So what we are saying here is, number one, we continue and make substantial progress in withdrawing. We will have further rate increases in the future.
How are things going?
Normalization process.
I've been doing really well lately, NASDAQ killer. It's been, I think the volatility of my,
identify the rate.
what do we call it? Account. Volatility of my account is higher than I would expect, but we have been making money.
So the destination for us
What the heck just happened there?
will be determined meeting by meeting. And, you know, to do that, as I said, it will be data dependent and it will be meeting by meeting. But we will look precisely at three key factors, just to give you a bit of flavor of how we are going to work in the next meetings that we have. First, we will look, of course, at the inflation outlook, which takes into account the evolution of the economy, including...
I am kind of sitting here looking at this volatility and being like, I don't know if any of this makes sense.
This is what we are fighting. It's the inflation. That's the first one. Second,
inflation.
we will also take into account the measures that we have taken so far, because in the last 3 meetings, including this one, we have hiked by 200 basis points. And third, we will also be attentive to the transmission lag of monetary policy. And we know, as we do that any decision that we make is not going to have an immediate impact on inflation, but will be subject to the time lag that always affects monetary policy decisions. So that gives you, I hope, a bit of the flavor of the thinking and the rationale.
Are you getting more bullish on equities?
Those decisions that will be made and those hikes that we will decide.
I was just reading through here, and apparently Goldman Sachs decreased their share buybacks forecast, which is a big hit to our bullish thesis.
Not all, because there are lots of other interesting and decisive matters that we discussed.
That won't start until Monday, really.
Let us call it the reduction of our APP monetary portfolio. This is a matter that we have discussed at our last retreat amongst ourselves governors.
It's going. Are they going to go for the high?
The substantive issues today, deliberately, because we decided on a lot of issues. But what we decided is that we would pursue that discussion and we would decide the key principles of the reduction of our APP monetary portfolio in December. So that gives you a bit of an indication of when those key principles will be discussed.
Not immediate, not ever, even in your dreams, any impact whatsoever on anything. What, you're talking about the ECB speaking?
Next.
Yeah, I'm not sure if the move up is really due to anything that she's saying.
To be, of course, in advance of the decision to implement.
But I'm really just not sure why it's doing what it is. We're coming up on 4% here, so we'll see if they kind of shy away from it again or not.
And the next question goes to Joanna Bersace of CNBC. Joanna, please.
Hi, President Lagarde. Thank you. 2 questions for you. The first is with respect to the neutral rates. You said at the last meeting, and this is a quote, "What I can tell you is that the further away we are, the larger the step we are taking, which is why we are front-loading now." Given that the deposit rate is now 1.5 percentage points, and the ECB have previously guided to 2% as being the upper end of the range of neutral, is it fair to assume that subsequent hikes will be smaller in magnitude than what you delivered today? That's my first question. And then my
So
second
yesterday's
question
high was
wasn't
07.5.
discussed in the statement, but it's about the anti-fragmentation tool, TPI. When you're looking at this tool and potentially triggering it, what is more important for the ECB, the spread level of a sovereign bond yield versus Germany, or the absolute yield level? Thank you.
Thank you very much for your two questions. I think what we decided is clear and straightforward. It's a significant rate increase, 75 basis points, twice in a row. And we decided to do that in order to pursue the substantial progress that we have to make in order to withdraw monetary policy.
They're pushing.
Our sense is that we have already
We
made
see a stop run here.
significant progress. As I said, we are not done yet. There is more ground to cover. And the question of what pace will be what will be the magnitude of future rates will be determined meeting by meeting, and will be data dependent, adopting the review of the three factors that I have referred to earlier, which is roughly and quickly inflation outlook, the measures we've taken so far, and the time lag of monetary policy. So I cannot tell you
So
much more than
close.
that at this point in time. I stand by my comment. Significant progress withdrawing accommodation, more ground to cover. We have acknowledged that more rates are in the pipeline, but at which pace, to which level?
Data to, I mean, they can they can use whatever data they want, right?
How not necessarily helpful this evasive neutral rate is, and we decided to stick to withdrawal, completing that job, and then taking a step to decide whether we need and how much we need to go further. Because it is not by simply normalizing monetary policy that we will identify and reach the interest rates that is necessary in order to deliver the 2% inflation target medium term that we have. Your second question about TPI.
Okay.
We did not discuss TPI at all.
Stepping back up to the plate quite aggressively.
I have said very clearly that in order to trigger TPI, we will look at a series of indicators, amongst which the spreads, the yields, but a few other indicators as well. And then we will determine if one country or several countries are or not eligible to TPI on the basis of criteria that I have also described for you in the past, which have to do with
big stack in 07.5 when they fell through.
Framework as well as fiscal policies. So that stands unchanged.
And below 4%.
Thank you, Madame Lagarde. And the next question goes to...
See if there's some fight here on it or not.
Aude, please.
Looks like a pretty strong trend coming into the treasuries, though.
President Lagarde. So according to the ECB, at what point does fiscal policy, when it provides aid against inflation, run counters to monetary policy? Has the British case made a difference? And second question about a systemic risk that you are monitoring. Have you identified some financial vulnerabilities in our economy, and which ones? Thank you.
You know, I think in the present state of uncertainty, with the likelihood of recession looming much more on the horizon, and the probability of it having increased, everyone has to.
They're looking like they can.
Our job is
keep going.
Stability. This is our primary.
Don't you think?
And we are riveted to that.
Look at that.
We are determined. All of us on the Governing Council, we are determined to deliver that price stability, which we have defined as the 2% inflation target in the medium term. There is no hesitation on that front. We, of course, have a
kind of
dialogue
slipping a little bit there.
authorities. And when I sit at the table of the Eurogroup in particular with a colleague who are finance ministers, I explain the point of our monetary policy, which is to fight inflation and to bring it down back to the 2% in the medium term. And obviously, they take into account their imperatives, but also the purpose of our mandate to reduce inflation. And I think that I must have repeated many, many times the famous triple T, which is temporary, targeted, and tailored, which from our perspective...
Oh, that's what triple T means.
...will help them address the needs of the most affected by income erosion and also by inflation, but without fueling inflation on a broad basis, because that would be utterly counterproductive in that it would require that we take harder monetary policy measures in order to deliver on our mandate. So that's the nature of the debate that we have. And, we are all attentive to what happens in neighboring country, in the euro area as well. And I think that messages speak for themselves. You asked me about systemic risk. It's... Maybe I would turn it over.
Is it going to go again?
President.
So that last little pullback after the push-up was a little bit concerning, but the pressure is still there, especially in the 5-year.
To the need to really focus on buffers and protection against potential risks. But please.
Well, good afternoon, first of all. Well, in 2 weeks, we will be releasing our financial stability review. And there, perhaps, the main messages that we are going to include there is first, there is a deterioration of the financial stability landscape in Europe. This has to do with the outlook.
Elon Musk, dear Twitter advertisers.
Financial conditions have been tightening. So we will refer to for instance, the situation of households, corporates, governments. The situation of the banks is positive. Now banks are much more resilient than they were for instance, 10 years ago, at the beginning of the financial crisis. But we have some concerns with respect to the non-banks. In the non-banks, taking into consideration the outlook, taking into consideration the situation of inflation, taking into consideration what is happening now in terms of financial conditions, then, we have to be very vigilant because we know perfectly that perhaps, in a remote corner of the financial system, we can have, a situation that could become difficult or complicated, and to amplify, the financial tightening that we have seen over the last months.
Thank you, Vice President, President. And the next question now turning to...
I'm seeing an alert here that Apple is about to announce here pre-market.
Good afternoon, and thank you
for taking my
questions. President Lagarde, could you please
good 8 ticks beyond now
that you expect to raise rates further? Because from the statement, the word several is missing, but in your reply to Carolyn, you used the word increases in plural. So just to be sure, are we looking at several more increases, more than one? And last time you gave us a number, 2 to 4 meetings. How does that number look like as it stands now? My second question is regarding telcos, because I'll be honest with you, having read your statement, it's not any more clear to me what you've done. The intention is clear, you want banks to repay early, clear, fine. But how? What are the numbers going to look like? I know a statement's coming in a few minutes, but if you could give us some numbers so I kind of understand what's going on.
Okay, I'm so pleased that you're honest with me. I want to celebrate that. So
that's going in our greatest hits.
You asked me about the number of rates. And, in the past, I did communicate our intention to move towards the neutral rate as a first step in the normalization process.
I'm not exactly sure the exact moment, but I just saw here on Twitter that it's going to be before market.
Normalization path, but that we still have ground to cover, okay? And as we have made those progress, I'm also telling you that the ultimate destination that we want to reach is the rate that will deliver the 2% inflation target in the medium term. And that rate, by the way, is not necessarily the rate at which we will have considered that normalization is completed. It may well have to go beyond that. But what I'm also telling you is that we are going to decide, meeting by meeting, on the basis of data and using the 3 categories of considerations that I have mentioned. So it might well be several meetings. Now, how several is that will be determined meeting by meeting. We know the path, we know the journey, we know the destination, which is not as clear as a figure that you would like to pin down, because we cannot do that. We simply cannot do that. We are not even in October at a meeting when we have a set of data that help us have projections, outlook for growth, outlook for inflation. We will have that in December, and we will take all these elements into account to determine what rate, by how much.
Seems to me that the Bund is interpreting this all as very bullish.
On the basis of data, on the basis of possible recession, if it
like we had some stop runs there, but the action's not backing off. It's still very fraught.
Recession, on the basis of what we have done, on the basis of the time lag, then we will decide if at the following meeting we also have to proceed along those lines. As I've said, the rate will be the one that delivers the 2% medium-term target that we have in order to deliver price stability. Well, on the second point, I'm very sorry that you could not read much into the TLTRO description that is included in the monetary policy statement. You will have, by the way, plenty of technical details as to how it works. But let me take a few minutes to explain to you why we made that decision. We made that decision for monetary policy reasons. Now, why is that? Because in the first place, when we modified the terms of TLTRO III back in the days of the pandemic, we made that decision for monetary policy reasons in order to incentivize banks to go contrary to what they would normally have done, which would have been to restrict lending. We wanted to support lending and therefore encourage them by...
I don't know why I keep finding myself looking for signs of this kind of like
that was the monetary policy
fizzling out and moving back down, but it's not happening.
To revise the TLTRO III terms and conditions at the time.
Let me check here again.
In between, we have...
Oh, you're right. I read that wrong. Post-market, October 27th.
By the
I'm so stupid.
Rise in
why did I see pre-market?
It
is today.
It
is today, though.
Of our monetary policy stance. You've seen that. We've moved from...
I'm spreading misinformation. I guess it's time to ban me from YouTube.
To now,
sorry, guys.
75 basis point for the DFR. And we've done that because of the change of circumstances. Now, stance is one thing. And it's
this move, as far as I can tell, is being driven entirely by the European, like the Bund. Because none of the currencies are really moving all that much.
You fully understand.
Yep, fake news, Seth.
Will apply as of November. We're doing that to make sure that there is no obstacle, that there is no deterrent to the transmission of our monetary policy, and that bank will actually transmit the lending rates, which by necessity of our monetary policy stance are higher and have to be higher. That's reason number one. Reason number two, it is also going to reduce the size of the overall Eurosystem balance sheet, which also goes in the same direction as our monetary policy stance. And third, it is also going to increase the pool of collaterals that will be available going forward. And we know that this is a sensitive issue given the scarcity of such collaterals. But the key point is proper transmission of our monetary policy and elimination of obstacles that stand in the way of monetary policy. Now, I'm going to tell you in very simple terms, because you will find a technical annex which is fairly complicated. But in very simple terms, what we are doing is looking out to November 23rd. So it gives time to everyone to adjust and to be prepared. We are raising the special interest rate, which will no longer be the rate that applies up until November 22nd, unchanged. But from November 23rd onwards, it will be the DFR. That's what we are doing. In addition to which, we are opening 3 additional windows during which banks will have the opportunity to pay back if they so wish. That's what we are doing.
I mean, it looks like the trend is fizzling out and heading back down, but...
Marlin of Handelsblatt. Jan, please.
Hello, Madame Lagarde.
Hello.
I have one question on the forecasts in September. The ECB assumes a growth rate of 0.9%. Many economists are much more pessimistic. And a few days before the Governing Council meeting, several factors materialized with concerning gas and so on. Would you say that it's fair to say that we are now in the downside scenario which was outlined there, and assumes that the economy will go down by 0.9%, a recession? And my second question is on the initiatives that several countries, several governments have decided to take measures to curb the rise in the energy prices.
This guy, I see potential in him. I think we need to help a bro out. Right? He had the question written down, and he was still like stuttering and and stuff.
Projections that we produced at our last monetary.
He sounds so German, yeah, he does.
And we had the baseline scenario, which for 2023 gave us.
I think we need to give our bro a makeover. Cut the hair off, man. Get rid of the hair. Wear contacts.
And your question really is, are we already
practice asking your question in front of a mirror?
Not facing the likelihood of
every day
a recession in 23. Number one, we will know a lot better at our December next projection exercise when all the data are collected and we can.
So it does look like this is turning over. I'm interested to see if they come back here to. I'm going to put something in here.
Before the cutoff date.
0.7 as 4% is right now it's 4% at least. So
if you look at the downside scenario,
we'll see if that does anything.
That we have made at the time
does anything, they come back there.
So in the assumptions, we had a complete shortage of Russian gas. We are still receiving some Russian gas. We had assumed no substitution whatsoever. And we have seen in the last few weeks that thanks to the
moment, it's kind of even hinting that they might not get that far back. 0.7, it might be too far back down.
We had assumed that commodity prices would continue to rise.
New York Post's website and Twitter account are being hacked.
Declining, and for some of those commodities actually declining significantly. So we are not in the assumptions of the downside scenario. Is that to say that we are in our baseline? No, because there have been developments that are hallowed with uncertainty, but that are clearly, and we say so in the risk assessment in the monetary policy statement, which are clearly to the downside. And we will incorporate those risks if they materialize in our baseline in December, which will give us a chance to have a more accurate picture for both 22, 23, and 24. But, you know, when you look at the all the sort of intermediate indicators that we observe in between two projection exercises, there is a slowdown at play. Clearly, there is a slowdown. On the positive front, we see less supply bottlenecks. We still see very strong labor and all the numbers except the intention to hire. But other than that, positive. We see fiscal support in discussion at the moment, and I'll come to the end of your question on that front. But pretty much all other indicators are pointing downward. Now, you referred to some of the measures that were decided by member states in order to curb energy prices, which is, you will remember, contributing massively to inflation. Plus 40.7% from September 22 versus September 21. It's a massive increase and a significant contribution to the inflation that we are facing. I was going to give you a Normandy response, which is peut-être banque, non peut-être banque, oui, but that's not the appropriate way to address it. It is all going to depend on how it is designed, what kind of transfers are operated, and how transfers, if such transfers take place, are financed. And obviously, as we say in the monetary policy statement, we welcome structural reforms that will target the energy markets in particular.
I'm starting to see a few signs of a liquidity hole at 03 half year.
By the European Commission for all European members, if at all possible.
I'm seeing the resting liquidity pulling around this area a lot.
The next question goes to Martin Arnold of the Financial Times. Martin, please.
Hello, Madame Lagarde. I'm sure you've seen the comments by several European leaders, including the French president.
Now this is just lazy, man.
New Italian prime
This right here.
Issued critical warnings about central banks pushing.
I haven't bothered to shave my head for 3 weeks.
Crushing demand and warning against these moves in order to salvage the credibility of the central bank and to fight inflation. What do you make of these remarks? And secondly, the markets are pricing in further rate rises up to about 3% in your deposit rate. Do you think that's reasonable?
Take it off, man.
Well, thank you very much for your two questions. On your first one, we have to do what we have to do. A central bank has to focus on its mandate. Our mandate is price stability.
Maybe the shaver was broken.
We have to deliver on that using all the tools we have and selecting those that will be most appropriate and most efficient. That's what we're doing today by deciding a rate hike and by changing the interest rate of TLTROs going forward. Is that to say that we are oblivious to the risk of recession? Obviously not. And obviously we are concerned particularly about those who have low income and who are more vulnerable to not only the risk of recession, but to the reality of inflation. And when we fight inflation, we think of our mandate, but we think about those people who are suffering most from inflation. And we will continue doing so. And we believe that in the present set of circumstances, given the instruments and the analysis that we can do, the decision that we make today is the most appropriate in order to restore price stability, which, as you know well, is critically important for not just the stability of prices, but also for the economy to actually prosper and recover. Obviously, recession likelihood, numbers resulting therefrom, will be taken into account in the analysis that we conduct at our next December meeting when we have far more in-depth data and information. On the second question that you ask, just as we cannot and will not be
At least when he looks straight into the mirror, it looks like he has a full hair.
And cannot be financial market dependent. We take into account financial.
I'm really not one to talk about.
Look at them. This is one of the elements that enter.
Being too lazy because I haven't shaved.
This is not it. And
you can see the side of my head.
As I said, we've got to do what we've got to do. Our job is price stability. Markets have to do what they have to do.
Thank you, President Lagarde. And the next question goes to...
Now that was a little bit of a scary statement. Our responsibility is price stability, and markets will do what they have to do.
Welcome.
Thank you.
So they are heading back to that 07 half.
Eurozone is about to expand, and Croatia will be the next member. And what we have witnessed in previous terms, usually countries that introduce euro see mild inflation next after the introduction. Do you see that we'll be seeing a multiplying effect in Croatia, given the raging inflation that we're already seeing in the rest of Europe and in Croatia as well? And my second question is, we hear a lot, especially in Croatia, what the introduction of euro means for Croatia, but what does it mean for euro? What's going to be the impact for the Eurozone and the rest of the monetary union? Thank you.
Well, thank you very much. And as I said to you and to your colleagues from Croatia, welcome. We're very pleased to have you with us today. And
that guy was looking around like, "Did I do a good job?" You did. You did, bro. That was a good. That was a good question.
No longer 19 member states; it's 20 member states.
Bravo.
And as of now, as you probably know, already 20 governors at the governing council table, because your governor is already participating as an observer, not participating in the votes actually, but he's there with us. I know, because there's a lot of work that has been going on for the last 12 months at least, that a lot of precautions and a lot of measures have been decided by the Croatian authorities, both Ministry of Finance and Central Bank of
President Biden, Q3 GDP is further evidence that the U.S. economic recovery is continuing to power forward.
Increases that happen inadvertently as a result of conversion. So, you know, whether it is by way of required comparator of prices in the previous currency versus euro, or whether it is the special accountability of all the price setters, I think that Croatia has actually learned from what we all have gone through more than 20 years ago, when the euro was introduced in a much smaller group of countries. And I really hope that all Croatian economic actors will have to, you know, will feel compelled to actually respect those requirements, which I know are embedded currently now in the draft laws that will be implemented. Is it going to be multiplied as a result of the fact that there is high inflation and way too high inflation? I certainly hope not, but you know, we'll have to see, and I think that it will be the vigilance of the competition and price authorities in Croatia, as well as all of you, to actually make sure that this is not the case.
They're going a little bit over today, aren't they?
Welcome Croatia. Well, first of all, I think it's always nice when you have a new member and an additional member in the family, and we are certainly thrilled about that. It's a country.
Yep, I'm not in charge of this stream anymore. Christine Lagarde is taking over. She'll be working with you guys moving forward. I wish you all the best.
The review of the Commission and with our own legal assessment. So we are. It's a great development.
Christine Lagarde day trading on YouTube would be so much better than speculator Seth, wouldn't it?
for the euro area, and we hope to help each other and certainly to offer the shield of the euro.
Thank you, President. And the next question goes to...
I bet Lagarde takes more live trades than you do.
Thank you, President Lagarde, for this opportunity. I have two questions, actually. The first one is about Giorgia Meloni, the new...
There's our favorite reporter again.
A few days ago, used...
She knows the camera's on her. She can't help but smile.
About the ECB decision. So do you see those words as a signal of a rising malcontent attitude about the ECB path from a founding member of Europe? And the second one is about the profitability of banks. Are you worried about that because of the latest decisions about deposits and rates? Thank you.
Well, first of all, I don't want to comment political discourses, and I would certainly refrain from that.
Forex Live tweeting out here: German 10-year yield falls below 2% level.
We central bank
It's so funny to think that the fund is at 2%.
Which is to fight inflation. And what people are most concerned about is inflation, is the cost of living. And I think that with, unfortunately, the time lag that goes with monetary policy, which means that our decisions of today are not going to instantly be reflected in the next weeks or months. So the time lag is, in a way, playing against us. But we have to just account for that and know that. But our job is to fight inflation as it stands. Our job is to restore price stability and to bring inflation back to 2%. And to that end, select the right interest rate that will deliver that once we have completed the normalization process. On TLTROs, honestly, we have only looked at monetary policy transmission. We don't want anything in between the best possible transmission and our monetary policy stance. We are very keen to see that transmission unimpaired, facilitated, accelerated to the maximum possible extent so that people can benefit from this fight against inflation. And TLTRO, as currently calibrated before the decision that we took this morning, was an obstacle, was a deterrent. And it was our duty to complement our stance, to facilitate transmission, to actually make that decision.
Thank you, Madame Lagarde. And the next question goes to André Stumpf of Expansion.
Good afternoon, Madame Lagarde. After changing the rules of the TLTRO, do you feel that you will face important litigation risks? Why have you chosen this way against others like the reverse tiering that was on the table? And also, do you think that the collateral scarcity problem will be solved with this? Because it usually worsens at the year's end. Thank you very much.
Thank you so much. The first test, the first motivation is monetary policy. And then, of course, like any decision made by the Governing Council, we have to assess what risks, what side effects come with the decision. So it has to be proportionate. It has to be the most efficient of the potential measures. And from all those accounts, and taking in due consideration the risk of litigation, we believe that this is the best monetary policy decision that we can take in order to accelerate the transmission. On the collateral question,
This floor is looking a little weak to me.
I'm not suggesting that it is the panacea and that it will fix the entire problem of collateral scarcity. I think that, was taken into consideration in the decision-making process of the Governing Council, but as a third component. It will so happen that if the banks decide to repay earlier, there will be more collaterals available, and as such, it will facilitate addressing the scarcity. But it's not the panacea, and not certainly the main motivations. And you're right that at year end, things become a bit more tense. We are monitoring that very carefully.
Thank you, Madame Lagarde. Turning back to WebEx, I would like to give the floor now to Eshe Nelson of the New York Times. Eshe, please.
Hi, good afternoon. I'm sorry I couldn't join you in person today. Just wanted to ask two questions. Firstly, on fiscal policy, you've been very clear about the goals that fiscal policy should have in relation to inflation, but has any of the decisions taken by European governments so far encouraged discussion amongst policy members about the impact they might have on monetary policy? And then my second question is on the changes to the terms of TLTROs. Could you just talk a little bit about
And here they're back.
the real economy impact be of these changes in these terms? Thank you very much.
They might find some support here, wouldn't be surprised.
Thank you so much for your question. And next time, please come. Frankfurt is beautiful and sunny. We have the benefit of a very warm October, which is helping in many ways, even though it is the stigma of something that is far more difficult and dangerous for us all, talking about climate change here, not regular matters that many of you deal with. On the fiscal policy, first of all, you have to know that the Commission is doing a very thorough job in assessing the design, the impact of the energy measures that are decided by various member states. And in doing so, the Commission takes into account I think they take into account 2 T's. I'm in favor of 3 T's, but it doesn't matter. They take into account how temporary those measures are. And
yeah, I gotta squeeze that climate change thing in, yeah.
They should be tailored at incentivizing the saving of energy by those people who are eligible to the measures that are decided. So the Commission does that job and has a dialogue with the member states when they decide to implement changes.
It's, you know what, is actually not too much trade down here now that they're back at 4%, which I find actually kind of a little interesting.
Provide for a particular price, which is typically lower than market price, which may have some variation up.
She can start by giving up her taxpayer-funded Mercedes limousine and start cycling.
Of consumption, which is either
Come on now, she's a little bit old to be cycling into work, guys. Come on.
Necessary consumption, and anything in excess of that then is invoiced at market rates. That's what I would regard as targeted and temporary by nature, because it's framed in that fashion, and tailored as well, because it gives an incentive to actually stay below the threshold to those people who are eligible. That's just by way of example of what, in our view, can actually work. On TLTROs, let me just repeat that what we want is the best possible transmission of our monetary policy.
She's only 66, 80-year-old with Dutch women cycle, real.
Were available for monetary policy.
Okay, but she's not Dutch.
2 years ago. We are focusing on the that will necessarily lead, given that borrowing cost might be.
Frankfurt is beautiful, really? Maybe in the ECB building it is.
That is inevitable, given the monetary stance that we have. Thank you.
Thank you, Madame Lagarde. This brings us to the end of today's press conference. Thank you very much for joining. Our next regular press conference is scheduled for 15th of December. Until then, all the best and goodbye.
Okay. I really don't like trade on the days that the ECB is speaking. So they end the press conference and the treasuries are right smack at 4%. And at first, it was kind of a little slow there. They tried a little bit of a bounce. It came back. I'm wondering if we might start to see a little bit more volume start to trade here. And they decide to just settle right there. Even the Berlin Zoo is a paradise compared to this. Is that really the case? But it's Germany. I thought that all German cities were beautiful and clean. No? Oh, let's turn our music back on. It's like, oh, it's so eerily quiet. It's so funny how, like, it took me such a long time to, like, oh, let's play some music in the background. And now if I'm not playing the music, something feels off. Who lied to you? Look, I was only in Germany when I visited Europe. I was only in Germany for a brief moment, and it was the countryside, and everything that I saw was beautiful and clean. I just kind of assumed that all of Germany was like that. Guess, you know, I did not say Paris smells good. That is not what I said. We just had this. It was only a few days ago, wasn't it? No, Paris is filthy, man. Paris was far and away. A part of it was that the hotel that we stayed in Paris was pretty ghetto, I guess you could say. but yeah, Paris was the dirtiest city in Europe, I thought. It was like, you know, they need more power washers over there. It's just like black tar and grime on everything. It's just gross. Lots of people smoke in Paris too. That's the other thing. Here in the US, you don't come across smoking. I remember as a kid, it always bothered me when people would smoke
we'd be outside and we'd be close to somebody smoking. I always hated that. But I remember when there was a smoking and a non-smoking section in the restaurant. I can remember that too as a little kid. And the US is so much more clean now. I mean, of course, I live in Utah, so we definitely don't see very many people smoke. But even if I go to somewhere like New York, that's not that many people smoke compared to like 10 years ago. Compared to like 20 years ago. But way more people smoked in France than I ever saw in the US. So we were just saying, oh yeah, the hair. So listen, man. I remember when I was 19 and the hair was started to go, being quite distraught about it. And now ever since I just like totally shaved it off, I can't see myself any other way. Like I could probably go out and get a toupee and have like a full head of hair and like everybody would love it and I'd look great and everything like that. Probably could. I don't know. What would I put? What kind of hair would I have that would make me look so great? I don't know. I wouldn't feel like myself. I like being bald now. And I think our brother, two of our brothers here during the press conference look like outstanding individuals with lots of potential, but you just got to take the step, man. Just cut it off. Just cut it off. When you get in like the horseshoe and then the little tuft in the middle, that's when you gotta shave it off, dude. Well, this is all very interesting. We got a pretty solid trend while she was speaking, and it's almost all retracing. You know, there was a point where I thought, oh, I should go short. But then I was like, well, no, I don't want to trade during the ECB press conference, and that seems like a really risky trade. But I guess I should have trusted my gut in that instance. You think that they'll come all the way back to 111? I feel like there were some other comments in the middle. Oh, you know what? While they were going, I was doing a little bit of browsing and found some fun stuff. So look at this. Here's Mr. Sunak with his puppy. Are you kidding me? That is the cutest dog I have ever seen a world leader with. If I think that this I have high hopes for this man. To be honest with you, maybe it's because he's a Goldman alum, but I like him. I like him so far. I don't know what the heck is going on with fracking. Like, I guess they made some sort of commitment to not do fracking until it had been studied more and stuff. Okay, whatever. The fracking decision was probably not the best one, but I still have high hopes for him. And I think that this man has a good choice in dogs right there. That's a good looking dog. Not as good looking as my dog. My dog is the cutest dog on the planet, I think. Straight up, just a Papillon named Goku. Straight up, just the cutest dog on the planet. He will bomb worse than Mario Draghi? Oh. Yeah, that's a good... man, Mario Draghi's... Well, you know, like here's the funny thing that I think is going on. Like, for conservatives in particular. So remember yesterday I was speaking to conservatives and I was saying like, here is kind of your moment, right? So don't, you know, well, so here's the warning now, okay? You didn't get your moment because you were so smart and your messaging was so great and you made all of the best political decisions and all of that sort of stuff. No. You're getting your moment because the left has just effed things up so horrendously, okay? And you're seeing problems that have kind of been piling up for like 50 years or so now, kind of all coming out and coming to a head, right? So I think that there is a very high probability that anybody that gets in office in some of these countries, in some of these situations, that it doesn't matter what they do, they're gonna have a hard time, you know? Like that the reality is just that things are gonna be hard, right? And I think that that's a little bit what was happening in Italy. That's I think a lot of what's happening in the UK. I think that Sunak is very capable of dealing with it, but even the most capable person in there may just fall victim to the circumstances. You know what I mean? Now, when a bank like GS comes out with an analyst report is complete BS or something to pay attention to. Okay, so let's talk about this, because this is I can give you like some really really good edge here. Okay, so here's what you got to realize: the market is not informationally efficient. The market is more statistically efficient than it is informationally efficient. In other words, it's really good at destroying patterns, but it's not very good at accurately representing all currently available information into the price. Okay, people think that it does, but it actually doesn't. So what kind of trips people up is Goldman Sachs will come out with a report and they'll say, we think that the S&P 500 is going to move down to 3,400 based on these current fundamentals, right? Okay, so you're making a price call based on the fundamentals, right? Well, the market's not very informationally efficient. So they could be 100% right about everything that they put there. Both their analysis and numbers are good, and their predictions of those numbers and everything are good, and still not see the S&P 500 reach their price target or go the direction that they want to. Why? Because the market is not informationally efficient, right? So if the market is not informationally efficient, then we can't work from this framework of what are the fundamentals and then wait for the market to come in line with the fundamentals, because it doesn't work that way. They can stay away from the fundamentals for a very long time. So what you need to do instead is you need to look at the flows. You need to predict flows, and you can say, okay, here's share buybacks. How much share buybacks are we going to see? How will that affect the S&P 500? What are all of the inflows into retirement accounts this month, et cetera, right? So now you've kind of got these multiple lanes of information, right? You've got the statistical information that we know. You've got the informational, well, we got the fundamental information that we know, and we have the stuff that predicts the flows, right? And now we can kind of watch how those things react to each other as we go along, and we can have a very strong and more complete understanding of what the market is going to do. So what does that mean? You want to read the analysts, especially Goldman Sachs and JP Morgan, okay? Because that's what all of the hedge funds read, and they base a lot of their decisions on that. Just don't read it with the expectation that the market is fundamentally inefficient, and that if this analyst is good and correct, that the market should come in line with their price predictions. That's not the way that it works. You could be the absolute best fundamental analysis in the world and still have a lot of wrong predictions, right? So the same thing here with like Jim Cramer. Is everybody says that he's like a contrarian indicator. Well, that guy says so many things about so many different stocks. Go look at how he manages his charitable trust, because generally speaking, it's mostly in line with the index. Sometimes it's a little bit above and sometimes it's a little bit down. But like when you're actually managing the money, that puts like a great deal of restriction. You can only focus on so many different things, and you only want to put money into so many different things, right? But when you're just making calls like on TV, as people ask you about the individual stocks, right, and you're just putting out recommendations left and right, You know, this is total nonsense. So to try and say, well, you shouldn't watch Kramer or listen to what he says, I don't even think that's the case at all. I think that you can learn a lot. And I mean, he is one of, when you're starting out, to be frank with you, when you're starting out, Jim Cramer is one of the best places to go and watch and learn about how the market works, because you learn a lot about businesses from watching Cramer, right? And you learn a lot about how Wall Street thinks about changes in businesses from watching Jim Cramer, right? Just ignore the stock recommendations and do your own work, right? What's your favorite flow predictor? It's actually a very good question. I'm trying to think of what has generated the most money for me, but I'm not sure I can quite tell. I think that for this year in particular, that the treasury market has not been very informationally efficient in respect to where we are with inflation. And I've had all of these times this year where I'm like, no, the inflation is still going to be higher. And it's very clear to me that that's what's going to happen. And then the CPI number comes out and everybody's panicked by it. But I like to be like, see the breaking news and be one of the first people to trade it when it's really obvious that it is, right? So breaking news, I guess, is probably, I think, the first thing that you want to look at in terms of a predictor of order flow, right? Jim's stocks picks are horrible. Do the opposite of his advice. I think that if you look at the recent 2 years, that if you did the opposite of his advice, that you made money. But that's not always going to be the case. Like I said, the issue is that he makes too many picks, right? If Jim had a list that was like Jim's top 10 plays, right? Or like you can look at his trust, for instance, his charitable trust, but not bad picks. They're just, what are you gonna say? And I think there's another issue here with Jim's picks, which is that people are only going to ask him about a stock when it's already kind of like a thing. Like they're only going to talk about it on the show when it's when there's already interest in it. So that alone kind of makes it like, it kind of hurts your stats essentially, right? And then anything that he does recommend, it's going to be like super up the next day. So if you bought it like the next day, you almost always get screwed over, right? Like the whole issue, here is following other people is really the real problem, right? The real problem is that you can't make money. Well, it's not that you can't make money, but there are serious problems with trying to make money from merely following other people, right? But what do you learn from him? You learn what sort of things people are looking at, how to value companies, how to decide if a company is a good company or not. Now you can go out with your own ideas and say, here are the big themes that I think are going to happen. I think that augmented reality is going to be a big thing in the future. I don't think that. Actually, you know what? Mine is, I think that nuclear power is the future. I think that at some point in the distant future, that a future president and Congress is we're going to have a shift towards nuclear power, and nuclear power, new age nuclear power companies like NuScale, for instance, although they're not public, will be the big money makers, and that will be the one where it's like, oh man, we could have made so much money, and how did we not see that one coming, and it was so clear, and yada yada yada, right? Okay, that's the one that I think. So then, okay, how do I value the companies that are coming out? How do I judge the different things that happen from it? How do I interpret the action from day to day? Why are the managers doing what they're doing, right? That's why you watch them. Him and Fast Money. I learned so much from watching those shows in the beginning, back in 2009. The bond market and the dollar index have really shown disparities with stocks this year. Lots of spread trades to make over 1 to 2 days. Yeah. You know, I haven't really traded the spreads per se, but there's just been a lot of bond volatility in general. That's why like right now I've been doing pretty well, but I'm trying really hard to temper my expectations, because I'm sitting here and I'm like, oh yeah, like we can size up and we can do this and that and it's going to be great, right? Like we're finally kind of at the, you know, the acceleration phase of our development. But then I take a step back and I say, well, actually, it's just an unusual year in bonds, and that's what's really going on, I think. Well, I have to say, so we did bounce there. So we pushed through 07 a decent amount. We had a bounce. I'm not seeing, well, in the 30-year I am seeing a decent amount of buying from it. I'm wondering if somebody is going flat the yield curve here again, because during that whole move we saw a pretty decent change in the spread, especially steepening in the long end of the curve between the 30 and the 10. So I'm still not entirely sure what to make of all of this action. I think that what we're getting is just oscillations after a relatively large event. I don't completely understand why the European traders did what they did. I don't understand the ECB nearly as well as I do the Federal Reserve, but it really looks to me like the traders really took something from the ECB press conference and wanted to buy treasuries here. Tobias, is more the way he presents it. Well, I don't know about that one either. So here's what I would say, the other thing I would say about Jim. He has a book called Mad Money. I would not judge his show until you've read his book, because he basically talks about how to use his show correctly, right? And I mean, he knows that he's kind of an actor to some extent, right? And that he's there to get people excited about stocks and to talk about as many stocks as possible. He understands that, and he understands that that's not the way that you want to invest, right? Read his book. Good book. I really like the book One Up on Wall Street, because that really tells you how to trade stocks, I think, and how to make money from long-term holding stocks and trying to manage a portfolio, right? But what you learn from Jim is the tactical, right? If you want to know, like, how do you do sector rotation sort of a strategy, that's what you learn from Jim. He was really good at it when he was hedge fund manager. So oh, Zach asked the question, where's the best place to read those reports? The best free place to read those reports is Zero Hedge. Zero Hedge frequently does stories about major Wall Street analysis. Yeah, just buy the pop when he mentions it and sell it 5 minutes later. Yeah, that would probably work. You'd have to be fast. And since it's all aftermarket, that's kind of a dangerous game, but I wonder, do you think that they'll make it to the highs again? Let's see here. Dollar's not moving all that much. I am seeing the 6J is on the downturn, so there's not much correlation between the Japanese yen and the treasuries at the moment. S&P 500 has kind of been all over the place. We're really trading within yesterday's range. Strong downtrend and a bounce here. Around the same time. Is it around the same time? No, not quite. Not quite around the same time as the S&P 500 shifting. So Went up on Wall Street. The whole book I felt lunch was masturbating about how to make lots of money when you have daily inflow of about $500 million under management. Dude, the guy was a legend though. Like the amount of gains that the fund made from their investments over such a consistent period of time is really amazing. Like, so think, like, compare him to Warren Buffett. I really think if I was like, who is the ultimate guru? Like, if you want to be a stock picker, who should you listen to and study? And, you know, everybody talks about Warren Buffett. But the reality is that the deals that Warren Buffett makes, you can't make, right? He's doing like, you know, making deals with people and getting involved and stuff like that. Peter Lynch was just a mutual fund, and it was the best mutual fund of all time, essentially. And yeah, he is the master. He's the one that, like, when he passed on yet? I think he's still around, but he's just really old. I think he's still around. Yeah, he's still around. Okay. But you know, the whole thing about, okay, like, keep trading until the day you die, and then after you're dead, we can have a conference and we can vote, and you have to prove that they did 3 miracles and all of this before they can be inducted into sainthood for traders. Lynch is one that I would be advocating for him to get sainthood, right? Absolutely. He is one of, if not the all-time greats. As we're moving back up here, starting, oh, what the heck is wrong with my monitor here? I think oh, the cable is probably loose. It seems like that the volatility is maybe actually increasing a little bit here. Oh yes, I need to turn my news squawk back on. Putin is supposed to be speaking. In an hour, we got Kansas City Fed manufacturing. We got a 4-week bill auction. 7-year no auction at 11. So from here on out, I think that the auction would be the biggest flow here. So we might see, well, that 44.63 at 16 might be part of the auction. Recommend the best site book to learn my channel. I got everything that you need, man. You know, the reality is that I think futures trading is a lot more simple than people initially think. They think, well, it's more professional trading and it's a little more, it's definitely more risk, right? But it's actually, trading futures is simpler than trading stocks, to be honest with you. And I have a couple of videos about getting started. I have 2 getting started videos that give you the main things that you'd want to know. And from there, just read a lot of news and watch the market a lot.
US BIS chief says China review to end when China changes behavior.
Rates going down, people really hoping for the Fed pivot thoughts. Well, you're definitely not going to get a Fed pivot. That's true. You're getting a pause in rates. You're getting a change in tone from the Federal Reserve, but things are still mostly in line with my own forecasts of where rates are going. They're probably going to do 75 basis points in November and 50 basis points in December, and then maybe a 25 basis point one after that, and then they will pause. And through most of 2023, they just won't do anything, and it'll probably be like that for a long time, right? The data is still bad, yes. So the issue that we have right now is that all of the leading economic indicators suggest that the market is slipping into recession, essentially, right? But that doesn't necessarily tell us what inflation is doing. That's kind of the problem, and inflation is a lagging indicator.
Expect the third quarter of 2022.
So yes, the Federal Reserve basically has to remain tight longer than it has to, because the only indication that we have about what inflation is doing is lagging, right? But it's never been the case that we have defeated inflation without some sort of a recession. It's also never been the case that we had recession, that we had big inflation, and then the next year it all just went away. It always takes a very long time for that inflation to subside. So that's why I think that the Federal Reserve's messaging about higher for longer is probably correct. That they do these moves and then they just hold it where it's been. And how the equity markets deal with that, we'll see, right? You don't think they might actually step it up after now? I don't think that the elections matter anymore. So here's the thing with the elections. So we talked about this yesterday, but I'll bring it up again. There's been a lot of talk about how Joe Biden has been doing practically everything that he can to try and keep things easy for the election, to try and help the Democrats. But here's the thing. It's not working. The Democrats, from all of the indications that we have right now, are going to get absolutely destroyed during the midterms. I think that it's still up in the air. I mean, like on Predict It, they're saying very, very good chance that Republicans take the Senate now too. I think that it's probably still a little bit 50-50. I'm really deeply skeptical about their chances of taking the Senate being that good. Okay. But they have been on the uprise. So the whole thing is that Joe Biden did everything that he could to try and make the markets look good before the midterms and everything. And he has absolutely, completely failed. Right? So I think that ship has kind of already sailed. Some things will definitely get worse, like oil will definitely get worse after the election, right? Okay, so there was a 4K, I think, at 16 at one point, and I don't think that they've traded through that. I will clear this up here a little bit. Yeah, isn't it wild how big of a swing down we had and now how big of a swing back up? Like that is a 5 basis point swing, right? There was like a 10 basis point swing up, a 7 basis point swing down, and a 5 basis point swing back up.
Gazprom says high inventory levels ensure safe passage of winter.
That is pretty wide range. But anyways, and to the other point, that the Federal Reserve's probably not going to change much. I don't think that they're thinking about the elections at all. I think that their primary concern is price stability.
Demand.
Yeah, they keep stepping up to the 16, but I don't know if they're actually going to trade. Or, well, actually, I think that they are going to trade it. It's a question of how many orders are going to be there. Okay, so they traded through it really quick, and then there was a stop run. Somebody stopped out at 16.5. That was 1,000 lots. Just immediately went off. And now there's a big old fatty order at 20. I'm actually, did not play out the way that I expected at all. I thought that there was going to be a big iceberg and that they were going to have to trickle into it. But it appears that the trade what really was put a stop limit order in there or something like that. So for that, nothing traded at 16 or 16.5 on the bid. So here they go. There's a new high.
So Russia's President Putin...
Oh no, that's just touching the previous high. There almost certainly will get a new high though, yeah. Like, think about it. Last week, we were at like 3.2. Isn't that nuts? Is it possible to code ninja strategies that use live order book data? Yes, I do. So I have one. I'll drag it over here. So I have one that is utilizing that information. So I'll give you just a really simple example. Cumulative delta has to use live order book data to make its decisions. It needs to know what the current bid and ask are to determine whether volume is buy volume or sell volume, right? This one I'm kind of running on a window to watch the flows. I also have some indicators that show like order book imbalance that you can trade off of. You can't back test, so it's like it's a little difficult to build a robot of that nature, but you can do it. You can do it. Man, there's a big stack now back at 16. It's a big stack back at 16. And I kind of feel that they're going to continue up. Like, maybe not. I was like, if I see a reloading here, I'll try and join it. But it didn't reload. It's actually just kind of sitting right there at the highs and being a little nonchalant about it. You think that they'll get through 20 and there'll be another stop run? That would be something else, right? I'll try a few contracts here on Sim. I'm a little nervous about trying to do it on my live account here still. Like,
so just taking a look at the fear and greed index, showing 58 out of 100, showing greed.
I'm just a little weary about how much further this could go. If I had kept my swing trade from yesterday, I would be up now 140. All right, fine, I'll take it off there. There might be a stop run at 20, but you could do something like maybe let's do a stop limit right there. Take a few ticks out if they decide, if they keep going through here, if there's a stop run. Okay. This is a real squeeze, man.
Putin's latest global events have grown into Putin's latest global events have grown into systemic crisis.
Adrenaline pumping.
Economic sphere.
A little bit it is. I don't like the way that that's going though. So I'm gonna scratch that one.
Get the US EIA natural gas change forecast 61.
A trade like that should just go right away, and it didn't. So this doesn't mean that it's over or that I would take a reversal or anything. But I was just at that the way that one played out makes me a little bit nervous. Like we do have to factor in that a large amount of volume just traded here in the 20 area, and that can become a real barrier towards being able to move up more. Yep.
Putin says we are witnessing war in Ukraine and destabilization situation in Taiwan.
It makes the liquidity hole. You can see it happening already. Can't seem to get price too far away from it. The resting liquidity at the location is low. Sometimes you'll see, actually in this situation, what you might see is another little rush and then it's over. But
and bloody game.
Putin is speaking at the moment, by the way. West is playing a dangerous and bloody game. Right, and you invading an innocent country has nothing to do with the problem, huh? Well, now the liquidity looks okay at the moment, but they're not really trading up into 20.5. My nose is really itchy this morning.
Putin says sooner or later the West will have to start talks about our common future.
S&P 500 looking pretty happy here with the uptrend. Okay, so there it's going. Not quite what I was expecting. That kind of trade where I'm like, you know, they come into a balance area and then you get a further rush up. I didn't really rush up. It was just kind of like a slow burn up and fizzled out. So I'm thinking I don't like it as a setup. But I also thinking that I don't like that I'm looking for shorts. That doesn't make much sense. Does kind of make me wonder though, with rates below 4% now. Humanity must find a workable solution, says Putin. Okay, wait, hold on. I have a workable solution, okay? Russia stops invading other countries and goes back to where they came from and respects all of Ukraine's sovereign territory. Does that sound like a workable solution to you? I think that's I did it, guys. I solved the world peace. I did it. Listening to some of these world leaders, just it pisses me off. It's like, nah, you went in and you invaded another country for no other reason other than lust for power. And then you turn around and you say shit like that. Oh, well, you guys are doing a bloody game and we must find a workable solution. Fucking psychopath.
Five minutes away now, so we'll get the USDA natural gas change forecast 61 BCF with a prior of 111 BCF.
See, I don't think that I can short this, but I'm not so sure I can go long either. Watch it continue without me. Well, the S&P 500 is starting to get a little should I call it frantic? That is like frantic action there in this boost. Yeah. Strong up force. There you go. Yeah. No, something's coming through here. I don't know, Spoos. You can't get too excited or we're gonna have to tighten interest rates again. Right? Like, actually, you know what? I'm thinking that's what's gonna happen. No, that's what's gonna happen. Is everybody gets all excited, like the Fed's pivoting and everything, and then the economy does too well, and that doesn't help for their fight against inflation. And then at the press conference or whatever, or maybe it's after that, maybe it's after CPI or whatever, the market gets smacked back down again. They're like, nope, you can't
The S&P 500 index rises 0.7% to a session high after rebound.
So let me approach this from a different direction. Okay. Bitcoin has been chopping around at 20K for forever. And it's kind of like, how long can that freaking go on? By the way, is my dollar index working here? It's not. Dang it. Let's see if I can fix that. Sometimes data will get frozen in NinjaTrader. Anyways, it's been sitting at 20K. And I'm sitting here like, well, okay, if the Federal Reserve backs up and everything, does that mean that Bitcoin can just continue going higher? Because, like, I don't feel like that the mania ever died down. Like, yeah, like, price came down and everything, but the people that were into Bitcoin, I don't see them. They're not any less interested in it. It's like, I feel like Bitcoin has already reached saturation status, but that the people that believe in it could totally just continue to try dumping more and more money into it. You know what I mean? Okay, so if the Federal Reserve backs off of raising interest rates, all of the crazy speculation would be right back. Just like that. Just like that. All of the crazy speculation could be right back within a month. So what does that tell you about how tight financial conditions actually are? Maybe they're not tight enough to slow the inflation down. Maybe. Then Bitcoin 19K support. I strongly suspect that Tether has been printing out a ton of money to try and buy it and prevent it from falling below 20K. So I agree. It's quite suspicious the way that it holds that range. And it has stopped responding to the risk on risk off trade that it was so heavily correlated to.
1 minute remaining.
So, here's your boys Akshay. Profits at Lloyd Bank dropped by a quarter in the 3 months from September as the lender sharply pushed up its provisions for bad debts, offsetting the boost it received from rising interest rates. It's because Akshay's not there anymore. They need you. All right. There's still some big orders. I kind of missed when they traded into the big one up here, didn't they? Yeah. Now, do they get anything over here? No. Well, there is 1,500 in the 5-year above us.
10 seconds. $52 BCF, 52 BCF.
Not my boys anymore. I left them with the stock price and profits at high. That's the way to do it, Akshay. It's been a baloney since.
Just know
they need you to come back and be senior trader. Turn the firm around. How much further do you think this trend can go? I'm really suspicious of this trend because, number one, I'm not sure I really see the case for it to have moved. Okay, so that's number one. Number two, we are now at 3.93. Okay, so remember when we were like at 4%, and we're like, well, 4% might, they might do something interesting. And now it's been 7 basis points since that.
And we have posted out the EIA weekly natural gas story.
This is like really extreme volatility. Like the daily range here is insane. Wait, where's my, okay, so it's not as big as 2 days ago, but it's getting up there. Did we just have so much information that justifies it to go further than that? Okay, so they did trade some of those big orders at 23. So that's the other thing is like, there is liquidity out there and they're buying through it. So this is kind of interesting. Very interesting indeed. I'm really thinking, I don't think I'll do it this week, but maybe next week we'll make a video, Bitcoin sucks. So for that, I don't think they will call it Bitcoin sucks because I don't think that the YouTube algorithm likes it if you use the word sucks. But we'll say, you know, Bitcoin isn't very good. Bitcoin isn't very good, and we'll talk about it because like the issue is that like in the short term I do see some positives for Bitcoin, but I just overall I don't like the tech. Do you think further upside? So this is a point where, like, if we're talking about the treasury, it becomes extremely difficult to tell how far it's going to go, and I am always continually shocked and surprised at how much it is. Like the issue is just that, like, okay, so we started this at the day like down 30k contracts, cumulative delta of negative 30, and we're now plus 18. So that's about a 50,000 contract change over the day. Now, from when we were like, after the, well, let's say when this trend started. Yeah, so when this trend started, we were -4. So this has been 25,000 contracts to the upside in net delta. So how much more can that get? I don't really know. Like you're kind of pushing on some of the strongest moves we've ever seen. Now, with the way that it moved and everything else, the downside, there's probably good downside. I mean, that move right there kind of makes me think, yeah, let's go for it. Long 4937. But like, how much are you willing to pay to be in that, right? Because this might go 50 ticks before coming back and going 50 ticks the other way, you know? Okay, so Bob Iacino says trade was 2.7 of a GDP figure that was 2.6. This is not a good number economically speaking, and stocks are rallying because this number won't encourage the Fed to get more aggressive with rate hikes. That's his take on the move up after the GDP number. What? Skechers says Kanye showed up to an LA office unannounced and uninvited. 2 Skechers executives escorted him out and his party from the building after a brief conversation, the company said in a recent statement. Does Kanye need money? Does Kanye need money? He seems to be unhappy about the losing his Adidas sponsorship. That's interesting.
Change unilateral.
Someone get that man help.
Conditions could damage.
Oh, listen, I'll help you, Kanye.
Partners.
Here's what you need to do. You need to find some Jewish friends, and you need to have a little sit-down conversation, podcast sort of a thing, about why what you said was bad and harmful to Jewish people. Okay? And anti-Semitism stuff is no good. It was. I mean, he said controversial things in the past, but what when you get into the anti-Semitic stuff, you're talking about stuff that kills people. Okay, so stop it. Apologize. Explain to people why it's wrong. That's his only hope. Serious, dead serious. And otherwise, it could be like he will have to self-fund everything through alternative platforms and stuff, because no sponsor is going to want to touch somebody that's saying anti-Semitic stuff. Yeah, NASDAQ killer. So Kanye West started saying things about, well, if you notice, all of the journalists are Jews. I wonder why that is. Right? So that's basically what that's parroting white nationalist nonsense that you've read on the internet or something. That's where that sort of stuff comes from. So he thinks that he's like, I'm just speaking facts and stuff, but nah, yeah, that's a line that very, very, very few people are willing to stick with you after something like that. So you know what makes today even more interesting is that we still have a 7-year auction today. So the 10-year futures, man, where is the auction going to take place at? Yesterday I took a trade off. I would have made a bundle of more money here off of this, right? I would have made whatever this is minus 1, so 40, so it would have been 60 more bucks. Less than 30, so it would have been $90 more that I made than what I made. So that would have been equal to my biggest trade ever. But I would have been pure luck, and I would have been sitting through insane volatility. So I actually am glad that I had just taken it off yesterday, because I really did not expect any of this stuff. I kind of thought, oh, okay, it is an ECB press conference tomorrow. I kind of thought, oh, we'll have a little bit of a move from the press conference, and then we'll kind of work things out. Maybe the uptrend can continue after that. But now it's just jumping up here. I'm just like, what? Wish you could stay longer. Oh, thank you so much. Yeah, well, here I gotta leave at the top of the hour. I wish that I could stream later in the day, because I'm realizing more and more that those of you that are here like every day, most of you are Europeans. most of you are Europeans. It's not US people. I'm kind of realizing, so the real problem with the stream is that we really actually trade. And if we were just talking about markets like after the market ended and it was just like a podcast sort of a thing, probably would have more viewers.
3%, last down 8.5 basis points at 4.0791%.
Rishi Sunak and Jeremy Hunt are taking no tax options off the table as they consider how to plug the hole in the UK's budget, the Prime Minister's spokesperson says. Putin says the West is losing its upper hand and is quickly becoming the minority. The neoliberal model of the US is experiencing crisis. No one can dictate to our people how we should build our... Well, that's true. We can't dictate to you how you should build your society, but we're just not going to let you invade other countries. That's all. We're just not going to... Well, maybe. I'm never one for the, like, it's the fall of society sort of a thing. I feel like that's just playing to people's natural pessimism, you know? So even if it's right, I don't think that it's to our advantage to base our worldview off of that. You get what I mean? So 20 to 21 was where we saw some of those really big trades, right? And there was also 16 was kind of where this first turned into like a, whoa, okay, this is going even further. What's going on, sort of a thing?
2-year yield drops to a 2-week low, 4.338%, last down 6.2 basis points at 4.3564%.
Seeing a lot of steepening through all this. Man, if the trade had been like a week ago, you'd taken a steepener. Good job. Good job. Like, I want to read all of these things that are coming out on the squawks from Putin, but I kind of don't. Wait, what is this French saying exactly? That Western society is falling apart and yada yada yada. It's I want to think that it's growing pains. I think it's growing pains. I want to believe that I can identify where the problems are. I think we talked about that a lot yesterday. What are the solutions? Not entirely sure. I wish I knew what the solution was so I could make a cool website to replace Facebook with the solution, you know, because I think that social media is a really big part of the problem, right? Nah, it's not that the West is losing its relevance. I do think that it is probably the case that the next, and maybe won't be this decade, but maybe next decade, we'll be looking at a more multipolar world. But just keep in mind that Russia and China, a lot of the wealth that they have built has been on the back of the West. And now that the West realizes what the situation is, they're not going to play that game anymore. Furthermore, China in particular really vastly overestimated their population and their population growth and everything else like that. They've gone back and they've done more careful census and everything, and they're basically finding that China has a lot less people than they thought, and that their population is aging extremely quickly. And so just as soon as it seems like that India is becoming that China is becoming like the top world power, it will flip and China will go into decline, most likely. And Russia is already in decline. So I think that this will kind of work its way out over a few decades, and then maybe we will go back to a more global world again. But the problems that we're having over here in the West with ourselves is people not knowing how to deal with the internet, right? I think it'll get better as you get more people that are having kids that grew up on the internet themselves, and to try and guide kids about what they see on the internet. And I think also, I think that more effort needs to be put into monitoring what your kids see online. I think that a kid sees something online that's cool. Like, I don't think that I necessarily well, first, don't let your kid watch pornography because it does have impacts on their brain. But, like they might pick up a political opinion here or there about something, that's okay. But just you want to talk and debate with them about it, right? I think you got to keep tabs on that. I think a lot of people, they just let their kids go wild on the internet. And you know what? I've been keeping a really strong eye on what my kids are doing. And my conclusion is that it's really hard and that the tools we have aren't very good. The only country that is not in decline is mine. Well, you're not wrong there. A lot of those kind of periphery European countries are doing. Morocco, it sounds like, is doing okay. Romania and stuff, they're doing. They're set up to do well. I don't know. This whole Russia thing could like screw them over, but. A pretty decent pullback here. I'm wondering. I said 3.94, didn't I? 15, 20 bucks. I don't know if that was worth it. Given the volatility that we've had, I don't know if that would have been worth it. I feel like that in order for me to take a trade here, that I would have to think that I'm going to get 50 bucks. Because that's just what the volatility has been. And as time goes on, the less volatility you're likely to see, right? Because the activity dies down. So, and normally I would have been more than happy to participate in all of that action, but I think it was ECB driven. I don't understand that as well. And it was kind of unexpected. So it's better to preserve the cash, I think. I could have easily have lost $100 off of all of that noise, right? There's only one way forward. There's only one way, and that is forward. Oh, there you go. There you go. So my question is still, how do I make, what would be Seth's ideal social network? I think Seth's ideal social network would be something that allows me to collaborate with you guys and discuss with you more closely. And it would, yeah, and I would like small groups, you know, like 200 people in a group, and we're working together on something, you know. Like small communities. Free for talk. I have not heard of that. I do think that there's been some really great things about streaming. I think that streaming and relatively small streams are like really cool. When they become like 10,000 people on it, and I think that a lot of the people that ended up being the ones that got the 10,000 viewers and everything are kind of shitheads that we don't necessarily want to have that much power. But small streams where I'm really able to like interact with everybody that comes on, and we're like regularly doing it, and we really get to know each other. I think it's been a really positive thing, right? Like I think I'm a better person, more sensitive to certain concerns in the world because I have you guys to talk to, you know. Not as much as it would be if I had actual real life friends. I do have some real life friends, but we don't get out of the house too much right now. I think that we will do a lot more when both of my kids are over 3, but right now it's kind of like stay at home time. Maybe the 16 holds. I don't know. They're kind of shying away from it, aren't they? They're kind of shying away from it. Real life is better. Well, like the whole meta thing, get out of here with that. Or the like everybody should work remote thing. I don't actually think that that's better. I mean, I would prefer to work from home, but I just don't necessarily think it's a good thing that everybody works from home now. A new world order should be based on law and order. Okay, cool. So the law is you can't invade other countries, right? Good grief. I don't know. That little move up there was actually had a little bit of acceleration behind it.
Get the Kansas City Fed Composite Index forecast -2 from a prior of 1. Let's get the Kansas City Fed Manufacturing prior 2.
So tomorrow we have Core PCE. I see Jim Dalton talking about has a webinar here today about preparing for Friday's PCE. So it kind of popped into my mind. And that's going to be a really interesting economic number to trade tomorrow, considering everything that's been happening, right? I don't expect that number to be soft, right? I don't expect that number to be soft. So does it not matter? I don't know. That's not a lot. Well, okay, there's no real like international laws, right? Not like that, but come on. How can you come around and say that the global world order should be based on law and order, and then meanwhile you're attacking a foreign country for no real reason? I mean, they claim that they have reasons, but that the reality is that Ukraine is a sovereign territory that was never going to do anything to Russia, and Russia has absolutely zero right or case to be getting involved in Ukraine at whatsoever. Like what he's doing, the reason why the West is standing up against it so strongly and the reason why it's such a big problem is because it's such a violation of international norms. And if we sit down and we say, oh, okay, you're gonna go invade Ukraine, it's totally fine, then what are we gonna do when he turns around and he wants to invade Belarus, Romania, etc., 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 right? That's why you got to stop it here. So to turn around and say, oh, well, we're about law, it's just such a nonsense. It's just such obvious propaganda bullshit, right? I know people might have different opinions about the whole Ukraine war thing. Like, I'm not happy that we're spending so much money on it, right? But it's just what he says, it pisses me off, right?
Forecast of -2.
I'm something that I've kind of noticed, and it gets more strong over time for me, is I think I had some run-ins with psychopaths or narcissists of some sort early on in my time on this planet, and the further along we get, whenever I see signs of that sort of thing, it makes me super mad. It makes me super mad.
UK's PM Sunak says, I hope that UK and India could continue to make good progress in negotiating.
Geopolitics don't care about right and wrong. The West have strongly reacted largely because it happened on the West's doorstep. Well, that's true too. Like like China has done not as extreme of a thing, but like similar things have happened elsewhere in the world where we didn't step in, right? Because it wasn't on our doorstep. Point out the psychos early and often. Totally. Like, that's what makes me mad about it, though, is that like they'll say this stuff and so many people fall for it. And I don't think that it's that I'm smarter than other people. I think it's that I've had the experience with it. And so I like immediately point it out. It's okay, I know what the truth is. I'm very confident in what the truth is. This person is saying that directly contradicts what the truth is, and they should be in a position to also directly know what the truth is. Therefore, they must be a psychopath. That's like the way that my brain looks at it, right?
BIS chief says the US is discussing export controls with foreign companies.
China and India and Pakistan have been asked since the 60s, and no one bats an eye.
10-year yield curve hits deepest inversion since March.
I gotta tell you, like, seeing India kind of ally with Russia and China is very disheartening to me. So you notice that if I've been friends with a group of people, okay, because like it's one thing here in the United States, for the most part, like especially if I live here in Utah, okay, it's just everybody's Mormon, okay. But if I meet a friend and there's some minority, they're probably like
5 minutes away now. We're expecting
the only minority of that group in the neighborhood. So it's kind of like they're your friend, but I don't think of them so much as the minority, but I just think of them as my friend, just because that's them being the friend is the more important than the thing that I'm interacting with, right? But there are some instances where you get to interact with like a whole group of people, and so you get to see like this group as a group, and you get to be friends with the group, right? So when I worked for the bank, I got to be friends with the Indians because there was a lot of them in our company, and they all were, there was a lot of collaboration amongst them. They did a lot of events and stuff together and stuff. So I felt like I got to know the Indian people to some extent, and like I feel like we're friends. And so when I see like India go down the path that they've gone down, it's like, it's super, super sad to me. But you know what? They'll get another president and they'll flip around, and I'm sure it'll be fine in the long run. India was largely forced in an alliance with Russia because the US won't stop giving weapons to Pakistan and industrial tech to China. There's a lot of political considerations about it over there that I don't understand. So, but all I know is that, you know, the president changed and the current president not so hot on the US. And it's not something that I expect to last forever. Back to 21. With the way that this is trading, it would totally be within the pattern to have another, 32 ticks up. I don't know if they can actually pull that one off. The volatile, the swings on this are just insane.
Euribor option wager seeks to profit on lower ECB terminal rate. It was one trade.
It's not because it shares values. Well, I agree with. I understand that. Yeah.
From a lower ECB rate, peak rate.
I don't think it's because they shared values, but I do think that there is some degree of political, like we would rather be with these kind of guys. It's kind of like in the US, there are some people. Hopefully there's not very many of them left. But before Russia invaded, there was some people that were kind of partial to Russia and kind of like Russia, right? I thought that it was kind of a similar sort of thing like that. It's not like we have solidarity with them or anything. It's just they've been affected by propaganda and their political incentives at the time kind of align a little bit better, right? It's that sort of a thing. So like the right, the reason primarily why the right has kind of been friendly to Russia, let's say, aside from the fact that Russia has been pushing a lot of propaganda towards conservatives to try and make them that. But why even target conservatives in the first place? Because conservatives have come out as the ones that are anti-globalism, and Russia is anti-globalism too. But they're going to get their wish, right? They're going to get their wish. Not the way that they wanted to, but they got their wish, right? Yeah, but that one doesn't make sense to me, actually, because, well, I gotta go, but India is basically allying themselves with China and Russia, which makes no sense because India and China hate each other. Anyways. I haven't been following the Treasury futures top liquidity over the past few weeks. Is it relatively lower today? I would say that we started out very, very light, but we've gotten back up to putting 1500s up again. More so, we've seen many very, very large orders, and we've seen many prices where a large amount of trade happened. So even though the resting liquidity is the resting liquidity is better, but still relatively light historically speaking, the amount of actual traded, so the latent liquidity, looks to be back up where it should be. And we're just getting a lot of really volatile trade here today. I don't completely understand it, but it seems like that the market really, really read what the ECB said today as super dovish, I guess. So, India is one of only 7 countries that recognizes Taiwan as an independent country. See, this is like Taiwan. I want to see with Taiwan. I don't have any relationship with the Taiwanese people,
57 billion,
but I wish I did.
It
looks like a fun place.
Settle on November.
Same with Korea. I want to go to Korea. I guess I need to travel. I don't like traveling though. No, I don't like traveling.
$4 billion in 52-week bills.
But maybe we will someday.
On November 1st to settle on November.
I'm going to head out, guys. I will see you tomorrow. It's PCE. Tomorrow could be a really interesting day. So I'll see you then. In the meantime, stay